right. So I decided to do a video strictly on structure. So a lot of people think that structure doesn't exist. The fancy liquidity traders say that structure is fake, but it's important to understand that if retail traders, institutions, all these people look at structure as being relevant, then it does exist. Okay. When something is as much seen, as much monitored, and as much marked than something like structure, it's relevant. Our goal is to identify what's relevant to the people to understand how to position ourselves with it. Okay. We'll go into very, 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 very uh, uh, basic baby pip stuff. So let me use the path tool here and let's look. So as you guys know, this is how you identify structure, right? So let's get this low. Let's say that this is the start of the structure. This becomes a higher high. This is now a higher low. Again, higher high, higher low, higher high, higher low. All this, again, this is basic, basic, basic. All those breaks are actually what we call break of structure. Okay? Why? This point broke this point. So if this was the last high and this is the most recent low, if it goes above, it breaks the current higher high structure. Okay? Now, this is basic, basic, basic. Okay? So, if you see structure closing below, how do we call this? Right? This point in here. Very, very important. This is called a lower low. So I can put the names here if you want. High, higher, high, higher low. Oh, or low. And what happens price now does this, 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 this becomes the opposite. So this is now called a lower high. Okay. Oops. My bad, my bad, my bad. Lower high. So here, lower, lower high, lower high. So again, these are the same thing. Break of structure. Why? Because this point, a low, a new lower low, and it broke the current. And imagine this is like ignore this and this is a new pattern. I just didn't want it to draw. So at what point, and this is where we will switch things up and you'll understand what to do. And I'll show you a graph that actually shows you something similar. And you'll actually notice the little similarities that we had this week. Some members were confused, and I think it's very important that we talk about it. So in this point, This is what we call a, guess it, change of character. If this is a change of character, you guys are, I'm not going to write that. Change of character, we would expect basically a new trend forming. That's a pretty lot, right? The point, this point made a new high. So this higher low is confirmed. Now the higher low fell because it closed below and it becomes a lower low. Let's go below and see a graph that I did. As you can see, let me just change the colors of this. One. So again, we have this point makes a higher high. Then we have a higher low. Then we have our official break of structure. Pretty clear. Higher high. And now, instead of putting a lower low or higher low, we have a confirmed failed higher low just because the lower high hasn't made a new high. See, this failed because this point closed below the previous high. Okay, and as you can see, we have that higher low here, and price makes finally lower low. We decided, me and the team, to change the names because we had too much confusion. So you know how we used to just say false break of structure? Now we're gonna have something that we call internal break. So FBOS means internal break of structure. Okay, it's because basically the purpose of both of them does the same thing. It's just that one is more refined than the other one. But in this case, this is what we call the complex equity here, the complex structure, sorry, what am I talking about? But if you see it as a leg, exactly the same thing. I trade a lot with the IFBOS because I'm a little bit more aggressive. I trade a little bit more refined with a little bit more precision. And you can notice that some of the indicators, the external structure, that is actually exactly the same thing. And we decide to put two different things like this so it doesn't confuse me. As you can see, both provide relevant reaction out of the way. And maybe all this on an M5, it's or on the M15, it's all the same supply zone, right? What's confusing to me is that some people are mixed up between these two. And I think that you need to understand what an FBOS is. I think that a lot of members think that an FBOS is, this is what people, I think, correct me if I'm wrong, I think that some of you expect something on the lower time frame to take, let's say, a buy, right? This is how I trade. This is very, very, very advanced. You should never watch the FBOS as a trading opportunity, or you should never trade from an FBOS forming, actually. Even though if there's a mitigation or whatever, you do not want to trade. The only thing the FBOS provides for you at your current stage is the identification of the trap. So you would stay away from that sell if that's the case, if you identify that FBOS properly. Okay, This is the only way and the only reason I want you to use FBOS in your charts. So we will go over with some live charts, know exactly the difference and understand the difference. But understand that when you trade and you look at those structural legs, everything in between is just fractal again. It's just more complex. And you should just focus on everything that is external to those external. Okay? Um, very important. This type of pattern needs 100% mastered. It needs to be understood, and you need to actually know that both of them provide the same idea, is that everything here is a trap. It's just that potentially one of both of them will provide an entry opportunity, or maybe it will not. Because imagine that you don't have a buy here, right? And this SMT provides a huge reaction, and maybe you can get a buy from here, right? So this is very important to identify both of them to understand that you will potentially get a better reaction or a new trade opportunity, right? And you will see I even trade from those. Sometimes I edge my position, take a small short, and then I will take a buy afterwards when there's a new opportunity. Okay, this is again more advanced. I want you guys to actually see this pattern and look at it in some of the charts, and you will start understanding some of the difference between the IBOS and the FBOS, the IFBOS and the FBOS. So let's look at some patterns. See some candles, some charts. Both of them here look similar. As you can see, we have kind of some reaction to Asia low, maybe a bounce here, and then the price pushes lower here, pushes lower also. How come both of the trades, both of these pairs have similar PA, similar reaction? Is it the same day? No, it's not the same day. But how come both of them will do different things? As you can see, well, and here, right? Here we go. Okay. And if you see this one, right, look at all the liquidity above. This one had here above, and look at this one, right? Both of those pairs provide similarities. How come they are completely different? And this is stuff that we will be talking about in the future. Identification of structure is mandatory for you to understand the little details inside the market. Look at the PA here. Right? Look how they're building. Let me just switch it back to red because look how that sell side liquid. Right? Here, here, here. See, lower high, lower low, lower high. Kind of fills and now creates switch. Can you see it? This is the only thing I want you guys to do when you identify that FBOS, right? This is the IFBOS, but both of them does the same story. It identifies this as being an SMT. We had a beautiful reaction, as you can see, and price went lower, right? In this liquidity. as you can see here, don't have any FBOSs. See, just coming out here, close below of this, ignore this crap here. Oh, higher high, higher low, higher high, doesn't close above this one, higher low, right? Higher high, doesn't close above this one. We're just trading in line. And you see how one single difference can make the whole day different. We still induce this point here. Both of them look pretty insignificant. But the trap and the story was made here around session. You will start understanding if it was that easy that you could have an Asia low inducement like this and then take a trade every single time, it would be way too easy, right? I think I'm probably gonna break some hearts when I tell you that I do not know when a valid FBOS is completed. I don't know when an inducement is done. As you can see, we have this point, this low, so that would make this liquidity being relevant, and we're just continuing overall sell side liquidity. How come we move with speed and price doesn't dump? Can you tell me? And this is what people do not understand. We cannot confirm an inducement completed. And this is why it's important that when you trade, you have those understanding of the structure, right? Look at this point here, right? Boom, 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 boom. Here, see? Expecting this one. I'm doing the internal one. So this is super refined. And let's just check if this one close below. Close below. See? So this actually upwards liquidity has been did with a, as you can see, this point led to this high structural shift. So what does this implies for you to identify this as being an SMT, right? And you can look to the left, it's pretty straightforward. We still have that Asia high, we still have all that liquidity below, above, and we still have all this to take. So when you mark this up here, how much, how many times, and how many sessions, how many trades have you tried to trade like this? Tell me. Don't lie to yourself. Just tell me. How many times have you seen this and entered like this? I probably did it 100 times. Right? Probably 100. And this is where, look, stop loss, news. Okay. This is where you need to understand that when price pushes with speed and it comes back and it creates that structural shift, this is an enticement for them to enter. This is the same thing that we just discussed. Look at the structure, right? Let's do a bigger picture of that. See? FBOS was like, look at the bigger legs, right? The FBOS is here. This is actually the FBOS. This one is the FBOS, and now we're just trading away from it. There is no secret formula of knowing, like, okay, we have that inducement. Like now you check, you have a reaction, and you go on M1 here, and you're like, okay, let's check and like let's enter this like this, and let's target low here, and let's go, let's go. Okay, yes, 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 yes. Yeah, yeah, and then you hit this SL. What indications do you have to wanted to trade in short from there? What? What? Why? Again, this identification of structure is very important. I'm just getting like getting away from the subject, but it's just that I've seen a lot of things on a Discord right now, and I need to talk about it. Is tell me, who are you to say that this is enough, and then you're at this point? Why would price reverse from here and not here? This is a question you can ask yourself. And this is why I don't want you to be trading right now. I want you to identify the liquidity. And while you identify the liquidity, you will start and looking at all this slowness of that PA when there's an inducement. You will be able to see they're retesting this break and retest traders here perfectly. So maybe there is a possibility that I enter from here, right? This, see, price continues, go. Yeah, just okay. And look, they push price, they come back, they push here, still taking liquidity, coming back. You could trade in line liquidity, target higher. I don't know what's the point of continuously always wanted to take reversal, but just trade in line with the liquidity. That's it, right? There's nothing wrong with trading in line with the liquidity. And when there's a reaction, try to justify it. So we have this here, right? Is there a short opportunity? Maybe, maybe not. And you just come from there. I think that people think that there's a secret formula. It's you stack the odds in your favor. You have proper risk management. You control your emotions. And I think where it comes down that people don't understand those FBOSs, those structures, is because they want to trade them. And that's not what we're asking, right? We're asking you to identify those FBOSs, as you can see here, internal false breaker structure, and that false breaker structure does the same thing. The structure has switched, and this is why you should practice identifying structures, right? As you can see, this close above, this is like clear, like as day. You cannot. There's not, and then some members ask me, does it need to go with a wick or whatever? The structure, the line, the price, the actual price, 0.844462 has closed above of 84,455, right? The price tick close above. So there's a breaker structure, right? If there's a breaker structure for them, it means that we have a proper SMT. What else can entice this SMT? Not entice, but create this SMT. We're under Asia low. What else? We have equal lows. Why? Simple. 1, 2, 3, 4, 5 makes a new high. Confirmation. So this also, if you addition all this, let's look together. We have FBOS, right? We have also the opening of the session pushing price lower, right? We can say London Open. Important. Every London Open and New York Open always provides volume. Like I said, the analogy of being rush hour in the middle of in the early morning where everybody goes to work, it's the same thing. What do we have? Clear equal lows, right? What do we have? New structural high confirming equal lows. What do we also have? Asia low. So when you put, like, let's say you have here and you have this, right? And you have L and you have buy. When I trade, this is exactly what I constant. identify the liquidity, and when there's liquidity on both sides, right? There's liquidity here literally on both sides. So let's look at it together real quick. We have liquidity here, right? And also we had liquidity here, right? We had liquidity also here. All this crap is liquidity. And now we're building new liquidity here because it closed above. The only thing you're trying to see is which liquidity weights more. If you're in the middle of the PA, let's say that you're here on live market, what weights more? This point that creates that FBOS or this? You need to stack your odds here. So let's say we have this, right, as a sell signal and this as a buy. So for the buy, what do we have? Right? This is a retail signal, not us, right? They literally see this to buy from here. And you stack the odds and you take a decision. So when all this is taken, then you go and you see a potential entry opportunity. You have that inducement of that previous day low. Even though this point hasn't made a significant high, every daily low has some kind of volume because people are looking at it as profits. Target daily low, target daily high, there's some release of liquidity, so it's normal for it to have reactions. And you have the price slowing down. You have the price slowing down. Do you take this? Of course not. You wait. So as you can see, there's significant liquidity taken, right? This is a little bit too risky. You wait for that. Here. You enter and you have that proper POI. Usually when it's pretty ugly, there's no validation. And you, what? You're here? Do you do this like me? Of course not. One day you will be, or you cover the low. What do you target? What is the significant liquidity? Of course, it's this one first and this one. Why? Because this point to this low, right? This is Asia high. This is also a valid structural point. So I think that in terms of confirmation and having a proper and a most probable DP, Asia high would be good, right? But even though this point makes sense also, you target this or you target the one above and you take your partials and look at this, the RR, it's 8. If you trade like me, it's a 1 to 14. What's the difference? You just identify properly which of the most relevant side needs to be taken first, right? Which side should be taken first. And it doesn't matter which side is taken first. You identify the liquidity, you have a proper risk management, you control your emotion, and you pull the trigger. People think that I'm a magician and that I know everything that will happen in the market. Of course not. But what I do have is experience. When I take a loss, I'm not gonna enter a second time and a third time, and like this is where it goes downhill. How many times have you? I think that even I, multiple times. Example, how many times have you done this? Minute. How many times have you done this? There's equal low, equal highs, an inducement. You mark this as a relevant break of structure, and then you try to short from here. How many of you did this mistake? Then you get stop loss. What happens? If I would have done this mistake, I would stay away. What will you do? Then you'll wait, and then you'll see this. And then what will do? You'll do this again. You'll try to enter here. And then what happens? This. What happens? You will do the same. And this is trading. right? If you identify properly the structure, you would know where to stay away from traps. So let's see it again. You have this here, this here, this here, this here, this here. Here we go. So it's very important that now you watch the internal false structure, because here the overall leg, it doesn't provide significant um, information, details. This is where the internal structure comes in place, right? Maybe this one here, here. And we just see you have that reaction, and with speed, SMT. And this is why I use the internal false break of structure, because it provides a little bit more details, right? More details equals more confirming, right? And it's pretty simple. Look, this is some of my entry criteria. It goes below, it retests that zone, right? Retest of that zone, create a new low, confirm the kind of the liquidity here, and this is the way I trade. I would take this like this. I think we had a trade like this literally on day one that it took in the Masters Technical. The shelter you can see, but this is some of my entry criteria. Why? Eating this. What is this? Of course, you're not going to know right now because we haven't talked about it. But it's just so you guys understand that identification of structure is very important. So there's always the complex structure. So the one, when I say complex, it's the more the fractal one, the more refined one, and there's the overall structure. If you are a more conservative trader, then you can trade the overall structure here, and it's complete. See, it doesn't make no damage. It just doesn't provide opportunities every single time. It's very important so you guys understand that those basics needs to be mastered. This needs to be understood. This technically switches the trend, but this is what confirms it. This one or this one does exactly this thing. What this one does, and why I use all the time, it provides more details, and it triggers usually more often than overall structure. Because what happens if in some cases you need to wait for those legs to be taken, you might end up wasting a whole day and waiting, right? And this is why I like marking those internal ones. So let's go on Euro USD real quick and let's look at, I think we've seen it. One, is it this one? Bar replay. Go. No, my bad. I think. Right. Here we go. Is this? Yeah, this is one. So, as you guys can see here, this internal. Why is it internal false breakout structure? Simple. It hasn't made a new high. Remember what we discussed. This is the higher high. Right? This becomes now a lower high. Right? This fails to make a higher low. Failed. Failed. What is this now? Is now a lower low, right? And as you can see, this is why I like those internal ones, because it provides more details. Because like this one, this is the point that led to this high, as you can see, this point here. Okay, so this would be the same example we had here. This is exactly the same thing. Why do I need like this one? Because it's triggered quicker. So what happens if I see a false break of structure earlier in the internal one? I just wait for a trade, and then I go in there. I see if there's an entry opportunity, and it's not. And this is completely okay, but it just actually triggers my attention to the chart to be able to go there quicker and see, okay, what's happening? Where can I get an opportunity and do it? This is very important that you guys start identifying structure, because this internal one, right? This internal one, boom, 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 internal one. Okay, it's very important. I think that video is a little bit all over the place, but I think it's just so basic. And I'm gonna be 100% honest. I will not be covering too much of the basics like I did right now, because I think it's very important that those foundations mastered from your end. You can go online and understand what higher high and higher low means. You can go online and understand how structure works, how it's being built, how it's being architected. Also, everything is possible online. What I decided to do this video for is right now, from today, we will have two ways of marking up FBOS, either a IFBOS or a FBOS. Both of them does the same thing. They create what we call a change of character. I just think that IFBOS and FBOS is cuter than an F change of character, right? I think we could call this a false banana if you want. The intentions are the same. So very important when you correct your task, when you ask us to check your charts, that you don't get confused if educators correct those false break of structure differently. The intentions are the same. If you identify this one or this one, the SMT is at the same zone, right? Same goes that when you want to write up liquidity here and you want to see those break and retest traders from here, this is why even though you missed that break and retest, you still have that breakout trader entering here, and the liquidity is at the same location. Don't overcomplicate simple stuff. This is very, very basic trading. And then we will have more videos about FBOSs, but a clear identification of those structural shifts are speed and momentum. Look at the speed of those candles. Very, very, very important. So I hope I clarified some of the confusion you guys had. You need to understand the difference between a higher low, a higher high, lower low, and a higher low. So if you need, practice this and understand that this is how traders use. Literally, they will do this, they will see that trend line forming, then there's a break of structure, change of character, there's a bounce here. I literally take trades like this all the freaking time, and then people on IG wonder why it looks so random. It's because I did my homework. Understand that when you master every single retail strategies, you can trade with them without any problems, right? I take multiple break and retest trades, multiple, very, 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 very often. I take example, oh, let's say there's a break high and then price comes back, see, and I take those break and retest trades all the time. It's very, very convenient. And it's just that you're trading in line with the liquidity. See, there's here the false break of structure, right? See here, the break below created equal lows, right? Look at those equal lows, but look at all this imbalance to fill, right? And people see this false change of character, false break of structure. This is not an internal one, it's a regular one. And they will short from here just because we have that whatever build up crap inducement high relevant break of structure, and they try to literally all the time they try to short from here. Tell me, for God's sake, where is the damn liquidity? You had, right? You had buy side liquidity being, right? Buy side, right? Now you have buy side. Let me remove this crap. You have speed and momentum coming, creating this here, right? Even though there's more liquidity below, the intentions are to induce early sellers. We already know that the buyers are there. Don't need to go overcomplicate it. And tell me, give me, please, the reason and the indication for you to trade this. What's on the, and I say I'd look to the left when there's an inducement of Asia high or Asia low, but if I would trade London, and this is why I hate trading London, because people create some scenarios and they just always target the moon and they say, there's equal lows here. What are you trading here? I don't want to get ahead of myself, but like, what are you trying to do? And this is why, again, like I said on one of the videos, equal lows or equal highs are the only retail strategy that the more they come, the better it is. And this is why I take those buys, those shorts, whatever presents every freaking day, right? Why? Because I know that this speed and momentum to the low side has been triggered to entice people to enter. They even let us with a perfect imbalance POI. Look how perfect it is. So please stop oversimplifying what liquidity is. It doesn't mean because we have liquidity here, this one has been taken by the way, and these equal lows are even solidified when it comes back. What can you expect if price is just nothing, right? Look how there's a reaction here. Release of the liquidity, right? Look the reaction. And then it comes back. What it does, it fills this POI. I would buy again from here, right? What happens? We just break, we retest, come back. We trade with the liquidity, right? Again, it's always the same thing. Always the same thing. And what happens now? While there's a reaction, simple. The decisional POI here, the imbalance is held. We have no more imbalance. Decisional POI that led to the new low created an obstacle. Look how many entry opportunity. You don't take this one, you take this one. Where's the liquidity now? Boom. Boom, right? There's again liquidity above, but what is it triggered by? It's the decisional POI, right? Look how they take their time. They come back again. They solidify those equal lows like we discussed here. And this is the only trade strategy that actually, the more it comes back, the better. So do you expect that this equal lows will be taken today? I don't know. I don't have the answer and I don't care because I just put an alert here and I just wait. And then those equal highs or equal lows are solidified and it's better. You trade with the liquidity always. Okay. So again, I'm sorry if I got ahead of myself with some of the things I was talking about, but it's very important that you understand that structure identification is mandatory if you want to understand where the FBOSs and the IFBOSs are. And please look at the intentions. Always look, even though you're trading intraday, what are they trying to do? The speed and momentum of this break of structure is clearly manipulation. It's clearly to entice people to short. Look at the push how fast they pushed to go in that POI. Like come on. Don't oversimplify already simple stuff. Okay? Well, I hope you guys enjoyed this little video. I understand that it's kind of complex for some people, like the whole change of character, IFBOS, FBOS, but it's very simple. This is basic baby pip stuff. I recommend that if this video doesn't help you, that you do your due diligence and you go on Google and search everything structures, because this is mandatory. It's the foundation of our trading, because retail traders look at it. If they look at it, we also look at it. Right? Hope you guys video. Catch you in Discord.